In section 16-3, we first need to check the boxes that are included in the various sections of the balance sheet. Also, the accounts that are not included on the balance sheet. So I'm going to start with the accounts that are not included on the balance sheet. So from dividends and down, you could check all of those as they are not included on the balance sheet. They are on the income statement or the statement of stockholders' equity. So from dividends and down, not included. Back up to the top, all of our current assets are the assets from cash down to interest receivable. Those are all used within 1 year, so they are considered current assets. Our next column is the plant assets. So plant assets include our store and office equipment and the associated accumulated depreciation. Those are all considered plant assets. Next, we have our current liabilities. So everything that ends in payable is a current liability. We do not have anything in the fourth column, which is long-term liabilities. So we have no long-term liabilities. Everything with payable is a current liability. Finally, the fourth column is our stockholders' equity. And capital stock and retained earnings are included in that. So those are the accounts included in the balance sheet. Step 2, we are checking the box on where we find these balances. So the amounts for the balance sheet are obtained from the adjusted trial balance and the statement of stockholders' equity. We deduct the contra asset. So it says less, we deduct. And after we double rule our liabilities and stockholders' equity and total assets when they balance. So we want our assets to equal liabilities plus stockholders' equity. When that happens, you double rule both of those. So which of these should balance? Total assets and liabilities and stockholders' equity. Step 3, we're going to complete the assets section. So starting with our 3-line heading, always the company name, name of the document, and then the date. Then we have assets as our account title, and then we start with our current assets. So all of these account balances are coming directly from the adjusted trial balance. Less means we're subtracting, so we have our accounts receivable less allowance for uncollectible accounts, giving us our total current assets in the final column. Then we have our plant assets, so we have office equipment minus the accumulated depreciation office equipment. Same for store to give us our total plant assets. These totals are always adding up the numbers in the middle column. And finally, total assets is our total current assets plus total plant assets. Our next section is the liabilities and equity section. So again, we're using the account balances from our adjusted trial balance. And we are hoping that our liabilities plus stockholders' equity equals our total assets amount. So we have our heading, liabilities, broken down by current liabilities. So everything with a payable gives us a total liabilities amount. And then stockholders' equity. Capital stock plus retained earnings gives us our total stockholders' equity, which we add to total liabilities, giving us liabilities and stockholders' equity, which balances and equals our total assets. So that is the goal of the balance sheet, to make sure that our assets equal our liabilities plus owner's equity. And that is section 16-3.